Yo, what's going on, guys? It's Arkham. Welcome back to a post-market post-market review here, or post-market analysis here. So this morning, let's look at the M5 here. We talked about how the S&P 500 this morning was in a six sister. Essentially, when correlating markets, um, what as we know, correlated markets, they tend to move alike, right? So the Nasdaq, the Dow Jones, and the S&P 500, they tend to move alike. As we can see, like so. They tend to move alike. So this morning we saw the Nasdaq take out these prior days lows, as you guys can see here. We saw the Nasdaq take out these prior daily lows here, and we seen the Dow Jones take out these prior daily lows here. But the S&P 500 did not take out those prior daily lows yet, and prior daily lows, prior daily highs, those are high quality liquidity areas that the market loves to seek throughout the trading day. So no, obviously being you know we were 10 points, 10 15 point range from the prior daily lows. It only made sense this morning to anticipate a break lower, wait for shorts to then take out these prior daily lows, as well as we did have these equal lows right here, like I mentioned, equal lows. So we had these prior daily lows as well as equal lows, areas of liquidity below us. So we wanted to see lower prices this morning. Based on that factor, oh, as well as we did come up here at 950. So we came into a market 950. That's when we started trading, or we started looking at the markets, anticipating a trade, right? 950, we came up and we swept these highs, right? We swept these highs. And I talked about how I didn't want to take this fair value gap trade because we just swept liquidity. No, after we just sweep liquidity, fair value gaps don't tend to hold the best. So it's best to anticipate some type of reaction, some type of bullish reaction at a bullish fair value gap, finding support before then taking an aggressive long entry, right? So that's why I talked about this morning. I didn't want to take an aggressive entry here in this fair value gap. What an aggressive entry would be is I would set a limit order, and as soon as it gets into it, I'd immediately take the trade. That'd be an aggressive entry. So I wanted to take more of a confirmation entry at this bullish fair value gap if it found support, meaning I'd wait for price to come down into this fair value gap, find some support here, and then see a push higher. Some type of bullish, like really strong bullish candlestick push higher. But as we came down into the fair value gap, right, we didn't see that. But if we did come down to the fair value gap and create some type of bullish candlestick here, some really strong like bullish engulfing candlestick here, then on the next candle opening, I would then take along a market execution. That would be a confirmation entry. So a confirmation entry in this example would be price coming down into this order block level here and seeing this bullish engulfing candlestick at this order block level. Then on the next candle opening, I would take the long right here on the bullish order block level here, right? So that would be, seeing price come down into a PD ray, give a bullish engulfing candlestick, a strong bullish movement higher on, and if we can close with that bullish engulfing on the next candle opening, as we open and come lower, I would then take a long. So that would be a confirmation entry. Unfortunately, we did not get that bullish engulfing. Instead, it gave a doji and then it dropped lower, right? So seeing price, come higher here, sweep liquidity, consolidate a bit, and then drop lower, we were anticipating this to then become an inversion, right? To then this become an inversion level, and we're anticipating price action to come back into this inversion level to then see a continuation lower into these equal lows and eventually down into the prior daily lows. So that was the overall plan. That was the overall narrative this morning. And we had a Um, we had a short entry here at this inversion fair value gap here, 5 point stop loss with about a 10 point take profit here. So yeah, exactly like this. Really good trade idea, really good setup, really good stop loss. But unfortunately, the AM session this morning was choppy. I mean, the AM session was choppy. There was nothing much to it. It went higher, it went lower, it went higher, it went lower, it went higher, lower, higher, lower, higher, lower, higher, lower, and the market didn't start moving until the PM session, until lunch, going into PM session, which is around that 12 a.m. mark or 12 p.m. lunch session, which is about the time I stopped trading. I stopped trading around lunch, and I typically don't look at the PM session. So, unfortunately, the move happened during a time that we do not trade, and that's something you guys are going to run into, you know what I mean? So, you can have a bias, you can have a narrative, and you can have a great entry, but at the end of the day, the market is ran on time, and that's why it's time and price. The market is ran on time, meaning price coming lower to sweep this liquidity pool, right? And these lows, it could happen in the AM session. It could happen in the PM session. It could happen, 20 minutes before close. You never really know 100% when the move will happen, and that's why it's important to be patient. That's why I exercise patience, because the market essentially is ran on time. So there's an expansion phase, and then there's a consolidation phase. And whether the market's in an expansion phase or a consolidation phase, it's completely based on time. So, this morning, the AM session was unfortunately in a consolidation phase, and we didn't start to get the expansion phase until the PM session. And this is what can occur. So sometimes the London session may give a um, expansion phase, but the New York opening may give a consolidation. Or the opposite, the London can give a expansion and the New York can give a consolidation. Sometimes, the London and the New York may give a move, which is really good. So no, and this is why trading is so difficult. It's because um you're never truly in control, and the market is always the market. It's never 100%. At times you can have the right idea, the right narrative, the right setup, but market conditions can always change, and and you can take a loss even when you have the right narrative, if you guys know what I'm saying. So we had the right trade idea, we had the right draw, we had everything right, but the market was just not there in our favor this morning, because the overall market condition this morning just wasn't favorable. And it happens, guys. It happens. And this is how you overcome losses. How you overcome losses is when you detach yourself from the market, right? You detach yourself from the market. Um, if you guys take a loss and you guys followed your plan and followed your execution and did what you need to, then it's going to be a lot easier to accept the loss because you didn't do anything wrong. The market was just not there today, right? You detach yourself, right? You detach yourself from the markets, right? You taking a loss doesn't mean it was your fault. The market just was not there today. Today was just not a day that you were probable, and it happens, right? It happens. But overall, I gave you guys the bias. I wanted to see a continuation lower on the S&P 500. We eventually got that. Um, Unfortunately, the AM session was just a consolidation phase, essentially just seek and destroy, where it was just going higher and lower and higher and lower. and the move didn't actually start until the PM session, which by then we are already stopped trading. So there was no move today in the M session. So no, just come back tomorrow, do it all again. Same pre-market planning, same live trading, same everything. Just do it all again tomorrow. Like nothing's changed. Um, in terms of what happened after closing here, we did get an earnings report here from Nvidia. If you guys do not know, Nvidia has been um the best performing stock, probably of the decade, the best performing stock of the decade. Um, it's some people say it's carrying the stock market, because it just keeps going higher and higher and higher and higher, especially with new technology and AI, and the innovation that's going on with technology from Nvidia. The stock is getting backing from millions of investors, and it's just been going on a tear. And today it had its earnings report after market closing, and yeah. So 3 o'clock here, we came lower. We came lower here 3 o'clock, and we started to see this push higher overall. After taking out these prior daily lows, we just started seeing this push higher here. Wow, for over 30 points. Yeah, just last hour of trading, the market just moves 30 points, actually 40 points. And 4 o'clock, yeah, around 4:20, that's when the Nvidia report came. And as we guys can see, it came lower, whiplash lower, and it's just been on the tear. So um today's just one of those days where the market kind of just accumulated liquidity, and this is what happens, right? When we have big news announcements and we have big obviously we had the FOMC meeting minutes later in the afternoon, plus we had Nvidia. Essentially we had big news announcements. What can typically happen is the AM session can accumulate, right? And that's exactly what you guys see here. Accumulation is essentially the market taking out both sides of the taking out both sides of liquidity. So as you guys can see, the market came higher, took out liquidity, right? Came higher again, took out liquidity, came higher again, took out liquidity, right? Then it took out the sell side liquidity, it took out sell side liquidity, came higher, took out buy side, then it came back lower and took out sell side. Every single time that it comes higher, take out a high and take out a low and take out a high and take out a low. That's smart money accumulating, building up positions, right? They're building up positions, right? Taking those traders out of the market and then building up positions, right? Essentially doing damage to both sides of the market to generate liquidity. So when the big move does happen, right? So when the big move does happen, the market has that liquidity, right? And that's what happens, right? So before we can have a big move, there has to be liquidity generated, right? To essentially create this big move. So what the market does, it will take out both sides of the marketplace, right? Whether you went long or short today, you probably lost. Whether you went long or short today, you probably lost, right? Because the market wasn't seek and destroy, essentially building liquidity on both sides of the market. So when the announcements comes out, the news comes out, the market has generated all that liquidity from taking out both sides of the market and taking out all those traders. To when the news announcements and everything like that, the events come out, the market has that necessary liquidity to then create a big move like this. Like we went up over 60 points in the span of an hour. In the span of an hour, we ripped 60 points, which isn't which isn't like nothing that shouldn't be deemed like non-impressive. Like that is impressive. 60 points in the span of an hour. That's a lot of liquidity. That's a lot of buying that comes into a market. But before that buying comes in and those big players step up, they have to generate that liquidity. And unfortunately, today, this morning, we were the liquidity. Dang, I mean, we trade liquidity, but we become liquidity, and that's just how it is. That's how the market operates. The market operates off of liquidity. You either take the liquidity, you take someone else's money, right? Someone enters a position, they lose, you take their money, or you lose and someone else takes your money. That's how the market operates, right? So some days you're gonna take other people, your note out and take their liquidity. Some days you become the liquidity. Today just so happened we became the liquidity. But you know, um aside from, losses and stuff like that, it doesn't matter. It doesn't matter, you know. It doesn't matter because you got to understand that when you take a loss and the market was trash, like it doesn't matter. Like the market was just not good today. Tomorrow the market's gonna be even better, and I'm gonna take a nasty trade and get a lot of money from it tomorrow. You know what I mean? Like today was just not that day. And so that's how you guys gotta look at losses. It's just like I did everything I was supposed to. I did everything right, right? I followed my plan. I followed my rule book. I did what I was supposed to. The market was just not there today. The market just felt like, generating liquidity and taking out both sides of the market, and we unfortunately became the liquidity, and it happens. But yeah, yeah. So quick psychology lecture plus you know, some more lectures on liquidity and and that's why I say I don't trade FOMC because this is what happens. When you trade FOMC is today was FOMC meeting minutes. Hmm, I don't know. I don't know if we should have traded today or we should have because there's sometimes the FOMC meeting minutes isn't that bad, but today the FOMC meeting minutes was pretty bad. I didn't know the Nvidia report was today, if I'm gonna be honest with you, until close to market close. Some people told me it was Nvidia report, but yeah, today was a really high probability day. Uh, but it just is what it is. But FOMC, I'm talking about Jay Powell FOMC, um, like the big FOMC. Yeah, this is why I don't trade those days is because of the concept here where the market will take out both sides of the market and generate liquidity, and then it's not until FOMC comes out then the market moves. And yeah, that's kind of what happened. That's kind of what happened today. I don't know. I think I might remove FOMC meeting minutes from the trading plan and put it on a day that I should not trade. I think I might do that going forward, putting FOMC meeting minutes on the train plan on a day I should not trade. Uh, basically because of concepts like this. Not that I can't trade it, but times like this where it accumulates and I'd rather not be in the market during these times, right? I'd rather be in the markets when there's big moves happening, when there's nice retracements, right? Like yesterday. Yesterday was beautiful, right? Big moves happening, nice retracements, bang, like really clean, solid price action, really clean price action. And then you have today where it's kind of just caught like scattered around, choppy, um, and that's dependent on news. If there's news that day, what type of news is there that day? What happened the day prior. A lot of things go into this, and I think removing FOMC meeting minutes from the train plan, I think that could help me. in the long run for sure, probably. So that might be added to a trade plan, but overall, F1, I mean, Nvidia earnings report came out, strong bullish push higher. In the live stream, someone told me, they were in NQ shorts and they wanted to know where to like close out of their position. Unfortunately, I think he did get stopped out as well. Yeah, he probably got stopped out as well. Yeah, NQ was just consolidating and didn't start moving till lunch. Same exact thing. But I told him we have this H1 order block here. This H1, you see this H1 down close candle? You see this push higher, down close candle, push higher. This is called a rally, base, rally, push higher, down close candle, push higher. I had marked this out for him, and coming into the Nvidia earnings report in the PM session here, we seen it come down into that order block level, find some measure of support here, and then we seen the overall NQ see that push higher. Nvidia reports came out, drop lower, came down to a fair value gap, and then we seen NQ overall just rip higher today for about like, yeah, 348 points, which is insane. Yeah, it's pretty insane. So overall, uh yeah, big gap, big gap higher, big gap higher. Yeah, for almost all of them. Dow Jones, yeah, Dow Jones also had a gap higher as well. So overall, the market is overall showing that it's not done. Um, it 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 might not be done. Looking for higher prices. Who knows? I don't have a bias yet. Obviously, we have to wait until the Asia session and the London session plays out. And then in the New York session tomorrow morning for the pre-market analysis, I'll have some type of planning. But seeing this big rally higher here, um, seeing this big rally higher here, literally coming right back up into the opening here, and yeah, we're above the opening price. We're above the weekly opening price here, so I'm not sure what to expect from the market right now. I'm not sure what to expect from the market right now. We've kind of just been inside of this back and forth range for a while now, so I'm not sure what to expect from the market right now. But yeah. That was pretty, wild. That was pretty wild today. But yeah, that's probably it for the post-market analysis here. I told you guys why I took the trade, right? We came up, swept liquidity, uh, swept these highs here. You know, we broke below this bullish fair value gap. This then turns into an inversion fair value gap. You're right, we were anticipating it pull back up into this inversion fair value gap level to then sweep out these equal lows and reach down into these prior daily lows. And unfortunately, it kind of just came right back up once again into this H1 order block level, I think. Yeah, it kind of just came right back up again into this H1 order block level. But before then, finally creating that move in the PM session. So, PM session for the win today, AM session took an L. So yeah, um, that kind of, it just happens. If you're a London session trader, sometimes London will consolidate and the real move will happen during the New York. If you're a New York trader, sometimes London will give a move and it'll consolidate during New York. Just because it happens, a couple times doesn't mean you completely change your trading plan, completely change how you trade. I'm still gonna trade the New York Open. I'm still not gonna trade the PM session, right? I'm still gonna follow the same game plan, same rule set every single day because my way of trading is maximize my winners and minimize my losses, meaning on the days that the New York AM session does give that really good opportunity, I'm gonna make sure to squeeze that opportunity as much as I can to maximize profits, right? While the days where the AM session does not give that level of opportunity, I'm gonna make sure to not be in the markets as long, for not be as in the markets as much, right? When the market is not present you an opportunity, the goal is less. And when the market is presenting an opportunity, the goal is to maximize on that opportunity. And that's overall the name of the game, right? Right. It's it this is how you have to treat it like a casino, right? We all know casinos are 50-50, but when the casino wins, the casinos win big, big enough to the point to where all the losses, right? All the losses doesn't make up for the wins that they make. So, you know, the people who win big on the casinos, right? The ordinary people who win big on the casinos, they're not damaging the casino because of all the little people, right, who are in the casinos every day losing. They're the ones feeding the casino, right, to then keep uphold. And that's the same thing with trading, right? Your winners want to be so big that all the little losers that you have, right, they won't budge your equity curve because you're maximizing on those profits, right? Because the market is always changing. You never know what you're gonna get when you come into the market. This is why you have to stick to a mechanical way of trading, right? A rule book, a set way of trading, so that you're not steering off course. You're not changing, right? One day you're trading London, one day you're trading New York, one day you're trading this, like stick to a rule book of when you're going to trade and follow that rule book every day. And when you get an opportunity, maximize that opportunity, right? And when the market is not there and it's consolidating, right, and you notice signatures that you don't like, walk away as fast as possible and come back tomorrow when there is an opportunity. And that's going to keep you in the game for the long run, right? So, yeah, we're literally back above the opening price, and yeah, price is reaching higher here, right? We came down into almost the 75% level of this long prior daily wick, and it looks like we're reaching higher here. Could we reach up into these prior weekly highs? I'm not too sure. I'm not too sure. No, that's gonna be a stretch reaching up into those prior weekly highs, but um, looking like, the market is not done going higher yet. The market is not done going higher yet. So we could anticipate a continuation higher. We could anticipate a continuation higher tomorrow, right? With these highs, right? These highs, right? And eventually up into these highs as potential draw on liquidity that the market can seek, right? So hopefully I give you guys more than enough value in this post-market analysis. I'll see you guys next time.